Office sharing company WeWork has filed for Chapter 11 bankruptcy protection in the US. Valued at $47 billion in 2019 in a round led by SoftBank, the company tried and failed to go public 5 years ago. It debuted through a special purpose acquisition company in 2021, but has since lost about 98% of its value. The company in mid-August announced a 1-for-40 reverse stock split to get its shares trading back above $1, a requirement for keeping its listing on the New York Stock Exchange. The company reported liabilities ranging from $10 billion to $50 billion in its filing, which is limited to its locations in the US and Canada. For more, let's bring in Andreas Jacobi, CEO and investor at 3P Sales and Strategy. He joins us now from Munich. Thank you very much for being with us today. Right, this company, WeWork, has been accumulating huge losses over time. We talked about a $47 billion valuation at some point, right? Where did the losses mostly come from?
Well, first of all, it's not unusual for a startup to accumulate losses. And in this case with WeWork, the losses has mainly been accumulated due to the very rapid expansion, both in North America and worldwide, whereas there are very high upfront costs of renovating the properties and then revenues only coming afterwards.
Right, and just a very rapid expansion, you are saying. To what extent did the pandemic accelerate the collapse of the company, and were there other reasons behind that other than the pandemic?
Absolutely. I mean, we've had in 2019 the ousting and departure of CEO and founder Adam Neumann after a failed IPO and SEC filing, which brought a lot of distrust with all the investors and severely hampered the ability to raise additional funding. And after all that, an already weakened WeWork was struck by all the pandemic lockdowns and everything that came after. So it certainly did not help in the recovery of WeWork.
Are you optimistic for the future, though? I'd like to ask you, I mean, now that the pandemic is nearly over, do you think that, this sector would improve or not really?
Well, there's different movements we're seeing right now. So a lot of companies are now trying to go back to normal before the pandemic, i.e. bringing more and more workers back into the offices, which has been one of the major issues for WeWork and other commercial real estate lenders, is that less and less people worked in the offices, which meant companies leased less office space. So now that we see a slight reverse, I believe it will go back to normal. If it goes fast enough for WeWork to properly recover, we shall see.